Really interesting investment analysis report today.
Mm-hmm.
It's focused on Snowflake, ticker SNO, and it's making a very bullish case for a price target over $300, basically all driven by AI products like Cortex and some big analyst upgrades.
A classic setup for an earnings beat.
Exactly. And look, the overall quality here, the conviction, it's exceptional. You've done a great job of weaving together the technicals and the institutional money flow.
I agree, it's a strong piece of work.
But even with a case this strong, the best reports are the ones that see the whole board. So let's jump into that first big area for refinement.
Okay, so the first thing is that a truly robust analysis has to anticipate and really neutralize the counterarguments. It doesn't matter how strong you think the bull case is.
Right, you have to play devil's advocate against yourself.
You have to. And look, the report is incredibly effective on the bull case. I mean, you nail it. You cite the $300 target from Jefferies, the, $325 from Citizens JMP.
Yeah, 325.
So you're painting this vivid picture of a short squeeze, a big revenue beat coming. The conviction is there, but the one gap is that there's no real assessment of what happens if that doesn't materialize.
What could stop it from hitting 300?
Exactly, and that's a classic issue, right? You get maximum conviction by just leaving out the downside. But that omission, it kind of exposes the whole analysis if things miss by even a little bit.
Yeah, it makes the report seem a bit naive if the market suddenly turns. Ignoring a risk doesn't make it go away.
It doesn't. So my suggestion is to integrate a concise, dedicated section. You could call it something like risk thresholds and variables,
Okay.
And this isn't about hedging your bet, it's about solidifying the integrity of the whole report. A smart investor is going to look for that risk section first. It tells them you've thought everything through.
So how do we make that concrete? I think one way is to define what success actually looks like. For example, the report correctly points to remaining performance obligations, the RPO, as a key metric.
Which is absolutely the right thing to watch for a consumption model.
For sure. It's that backlog of guaranteed future spending, way more important than just one quarter's revenue. So if it's that important, we should explicitly state what a failure would look like.
Okay, so define the boundary.
Exactly. What's the minimum acceptable RPO growth that keeps this $300 target alive? What if it comes in at, say, 25% year over year instead of the 30% everyone's hoping for? Does that break the thesis?
That's it. You've just defined the rules of the game. Now you can apply that same logic to the competitive side. You have this great line about Cortex solving the data privacy headache.
Yeah, which is a huge deal for enterprises.
It is, but what if the competition comes right at that? You could briefly discuss the risk of a major hyperscaler, an AWS, a Google, a Microsoft Azure, rolling out a direct competitor.
Something deeply discounted or just bundled into an existing enterprise contract.
Precisely. How strong is the Cortex moat then? And what about the macro picture? Everyone's talking about this stabilization in cloud spending.
Which is fueling a lot of the optimism here. But what if it doesn't really materialize? What if it's just a blip and consumption models get hit across the board? Addressing these headwinds even briefly just adds so much robustness.
It shows your conviction is built on a real foundation, not just optimism.
It shows you've looked at what could go wrong and you still believe in the thesis.
Absolutely. Which leads us directly into the second big opportunity, which is about the core catalyst itself, that whole AI story.
Right. So to really establish market leadership, the report has to foreground its own proprietary insight on that core catalyst rather than just leaning on what other analysts are saying.
Okay.
I mean, the analysis correctly identifies the driver here is AI adoption. It's Cortex, it's the NVIDIA integration. You've even got that great phrase, the iPhone of enterprise AI. It's a good hook.
It's a great narrative hook. But then, almost immediately, the justification for the price target, that 300 to 325 range, it just points to the upgrades from Jefferies and Citizens JMP.
Yeah, I see the risk there. It almost positions the report as a reaction, like it's just confirming what the big institutions are already doing, instead of being the source of the idea.
You've got it. If you've done the deep work, you need to own that conclusion. Show us why those analysts are upgrading before you even mention their targets.
So the suggestion is to beef up that middle section?
Exactly. The whole core catalyst section. You need to dig way deeper into the structural advantages of Cortex and that NVIDIA integration. Move past the rhetoric, past the iPhone of enterprise AI, and give us some specific proprietary quantitative evidence.
Prove why it's the engine for enterprise AI.
Yes! We need the proof of concept. And then you have to translate that into a financial opportunity.
This shift from just validating others to leading with your own work is so critical. So let's talk about quantitative implications. Like, instead of just saying the NVIDIA partnership exists,
Right.
you could detail how that GPU integration actually impacts customer costs or, processing speeds compared to what they're using now.
Can you put a number on it?
Yes. Can we quantify that efficiency gain? If a query costs an enterprise $10 and takes 10 minutes today, but with Cortex and NVIDIA it costs 50 cents and takes 30 seconds, that is the value creation.
That's the mechanism that gets the stock from 200 to 300.
You have to present that calculation, show your work.
And to build on that, let's go back to that data privacy headache point. Huge qualitative selling point. But how does that actually hit the balance sheet?
Good question.
You could bolster the report by talking about the financial significance. Maybe reference the size of the market for regulatory fine avoidance, or quantify how much faster and cheaper it is to migrate proprietary data using Cortex.
Find the numbers that only your deep dive would uncover.
You've already got the compelling story. Now back it up with numbers that are yours, not just recycled from a Jeffries note. You have to own the value creation.
That's the goal, establishing that intellectual command, which, makes perfect sense. The RPO metrics, the consensus numbers, the data in the report is serious, it's institutional grade.
It is.
But that actually brings us to the final area we wanted to touch on, which is about making sure the conclusion matches the gravity of that data.
Yes, the tone and style of the concluding summary have to align with the analytical rigor you've established throughout the whole report.
And right now, there's a bit of a disconnect.
There is. You present all this high-quality professional data, accumulation patterns, RPO metrics, and then the final summary, it just shifts gears completely. It uses this sensationalized language, rhetorical questions.
Like everyone thought Snowflake was melting.
Exactly. Or, is Snow the most undervalued AI play left in the market?
It's a total whiplash effect. You go from reading a serious investment memo to something that sounds like a hype piece.
That's the perfect way to put it. When your data is this strong, your conclusion should feel like a closing argument. Confident, definitive, not a sales pitch.
It's like putting a clown nose on a tuxedo.
It is. It just undermines all the credibility you just spent pages building. So the suggestion here is pretty simple. Just refine that concluding narrative.
Okay.
Summarize the structural findings, that shift from a data storage locker to an actual AI engine. Use confident, assertive language. Let the wrap-up be a synthesis of what you've already proven.
And you can do that without losing the excitement, right? The goal is confident assertion, not sensationalism. So instead of asking if Snow is the most undervalued AI play,
Which is just vague.
you conclude by stating the conditions necessary for that 20% upside you're forecasting.
A much stronger close.
Yeah, you could say something like, a product revenue beat driven by quantifiable Cortex adoption is the critical trigger that confirms this narrative shift and justifies the consensus $300 target.
See, that frames it professionally. The target becomes a function of verifiable performance.
And then you can focus the final takeaway on the key watch points for the earnings report. The product revenue number, the RPO growth, make those the final actionable items.
It keeps it clear, objective, and it lets the data carry the weight.
It absolutely maintains the conviction, but it just elevates the institutional quality tenfold. The data speaks for itself. The conclusion should just be its final confident word.
You want the person reading it to feel like the conclusion was inevitable based on the evidence you showed them, not that they were hyped into believing it.
Perfect. Okay, let's do a quick recap of the 3 main actionable areas for strengthening what is already a really compelling report.
Let's do it.
First, proactively address the limitations and the downside risks. That's going to increase the report's robustness. So define those risk thresholds, especially with RPO, and talk about the competitive threats.
Second, you've got to deepen the proprietary analysis of that core Catalyst, Cortex, and NVIDIA. Lean less on other analysts and more on your own quantitative evidence. Show us the math behind that $300 target.
And finally, calibrate the tone of the conclusion. It needs to match the institutional quality of your data. So trade that sensationalized rhetoric for a confident, assertive summary of your objective findings.
Look, this is a powerful investment.